Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in. All right, guys, we are back with Behind the Doors podcast here. And Marvin is out today, so I'm on my own with you guys. But we have a special guest, so this will not be a boring episode for sure. So we've got Brian from Tax Sale Resources, really the leading platform for tax lien and deed investors. You guys do a ton. I mean, you guys provide them research, you provide them auction access, asset management, even some of the financial tools that they need in order to get into this type of investing. So I think what's cool is like we really in our world, we talk about, just buying rental properties or buying flip properties, but you offer something different to real estate investors. So I really appreciate you being here, Brian. Let's talk a little bit about what you guys are doing over there.
Yeah, thanks for having me, Dan.
Of course, man.
Where to begin? Well, it's kind of one of those we started, putting tools together really for initially internal use, and this is back in 2007, 2008, and had a friend, a future business partner, recommend we make our platform that we were building available to the public, and maybe we could cover some of the overhead of running a small, I'll call it tax lien fund, although it is nowhere near the scale of some of the tax lien funds out there. And that platform, which became Tax Sale Resources, really was just selling Excel files at the time. It was nobody was compiling when and where these auctions were occurring. Nobody was compiling a comprehensive list of the property information associated with those auctions. And so that's really how we got started, and that has progressed immensely to now an online due diligence research tool. Like you mentioned, it's got we have a portfolio management platforms for anybody that does get into the tax, really the lien side. It can be a logistical nightmare managing, thousands or tens of thousands of these, I call them micro loans or micro mortgages is a, interesting way to look at it. And then, out of necessity, we eventually found a lot of our customers, at least on the tax deed side, it's a very cash intensive business. So we created a fund to help provide, capital to them as well. And so we really have landed on something that is fairly comprehensive. Tax liens and tax deeds are very different animals. Tax deeds are really just another form of getting into real estate that a lot of people just don't know about. Yeah. It's kind of there's real estate and there's like mortgage foreclosures, right? A lot of people know about those. And then there's, tax foreclosures, which even fewer people know about. And that's essentially what a tax deed is. But at the end of the day, you're buying the real estate with a tax deed. And so people that buy tax deeds aren't just buying tax deeds. Some of them are, but in general, it's just another method of acquiring the real estate. But it is very cash intensive. You go to the auction, you don't have insurable title at these auctions. And so you can't get standard bank financing. And that's really, really how our fund came about as far as providing the capital side of it.
Awesome.
So anyway, I guess we can dive into
all
of that.
Yeah. How'd you get into tax investing, tax deed investing? How did that evolution start? Yeah.
I guess I like to say I got into them on the wrong end of the tax lien. I was going to finishing up school. Actually I went to school at Arizona State out there in Tempe. And so shout out to the Arizona crowd out there, at least the Arizona State crowd out there. When I was flipping a couple properties, I'm originally from Montana. And so we were flipping a couple properties up in Montana, and really right at the start of the, what's now known as the Great Recession, right? It's 2007, 2008 and ended up upside down on one of the properties that we were flipping. And the weird thing about how tax liens work in Montana is every potential investor, because so usually in most states it's just the county that sends a notice, but in Montana every potential investor has to send a notice to the property owner. And so I got flooded with, I don't know, it was like 20 to 30 of these, certified letters of varying language of different threatening is in like, hey, you could lose your house over this. But it was that flood of communication that made me go, what the heck is this all about? I didn't think about this at the time, but if it had come from the county, probably wouldn't have thought twice about it. It's just another delinquency notice. We eventually made that all right. But the fact that I got it from all of these individual investors is what made me go, I got to look into this. What is this all about? And really led me down this path of figuring out, this tax lien investing thing is real. There are funds that do this at scale. And so really pivoted. At least I was smart enough to go, okay, maybe flipping property, maybe it's not the right time to flip properties. Maybe it would have been a couple years later. But started investigating these tax liens, and that's what led us down eventually buying tax liens on a small scale in really Montana and Wyoming, which now knowing what I know is probably two of the hardest states to really make any decent money in. But I didn't know all that from the beginning, but that's what started the journey.
Cool. That's awesome. So with these tax deeds, I mean, what's really the opportunity size? Like how many of these are happening in a given month in, say, a market like maybe Phoenix? Like how often is this truly happening? Do you have some statistics maybe around that?
Yeah, we are, I'd say, I think the only group that actually aggregates data. The National Tax Lien Association reaches out to us, and we give a presentation once a year, just kind of a state of the industry and how big is it. And we really segment it between tax liens and tax deeds. They're interestingly about the same size dollar-wise. There's about $4 to $5 billion in each of those segments sold annually. So in the largest state being Florida has about $400 million in tax liens sold annually. And then again, on the tax deed side, there's also another $4 to $5 billion in real estate sold on the tax deed side on an annual basis. Now, there's definitely a difference in quantity, right? Now, with a tax lien, you're talking, 2-3% of the property value, being sold at auction. And so you have a lot more liens versus deeds. Those are being sold at, a percentage of actual market value. And so there's a whole lot more liens, right? But those liens are sold at a lower dollar value than the deeds. The deeds are lesser quantity, but, purchased at a lot higher price. But the industry as a whole, averages between $8 and $10 billion a year sold annually. So it's kind of one of those, very small compared to real estate as a whole. But when you look at that industry size compared to some of the other industries, it's really not that small. It's a fairly significant dollar amount out there.
Yeah, that's cool. So what kind of investors, would you suggest this kind of investing for? Is this your passive guy? Is this a newbie investor? Maybe your tools cover all those bases. I don't know.
Yeah, I don't know that either one of them are necessarily for newbies. If you're, there's really two different mentalities as we've found, and there's certainly folks that go after both. But the tax liens is really a note. It's a micro mortgage that you're buying. It's a much more passive investment, and it's more of a contract that you have with the county where you're giving them a certain dollar amount, right? And in return, you get a lien, right, as collateral on that micro loan, and also get superiority. And so if you don't get paid back over a certain amount of time, you can start a foreclosure, and maybe end up owning the real estate. At least you used to. That whole thing is changing. We can go down that rabbit hole with a Supreme Court case that's come down the pipeline. But
right.
Lien investing is definitely much more passive. The deed side is they're real estate guys, right? They're buying the real estate. They have an end goal in mind. They're the fix and flippers, right? And usually, tax deed properties do require a lot of work, and so they're folks that are either fixing and flipping, purely for the profit, or there are folks that are attacking blight, as a term used, right, as like, hey, I want to improve the industry, right? And that's kind of how we look at it. Industry or the neighborhood is probably a better way to say it, improving the neighborhood, because usually the tax sale properties are like the worst eyesore on the street, right? And if you can go in and turn that around, typically the neighbors love you for it. And so if you're trying to get that, that feel good out of, an operation, you can certainly get that in the space as well.
Yeah, that's awesome. So really, what are the key problems that, tax that you guys solve? I mean, what exactly are you guys solving for somebody that wants to get involved with tax deeds?
Well, initially it was very basic stuff. When we got started buying liens, there was no website you could go to, right, to say, hey, when are the tax lien auctions occurring? And, we were focused in Montana and Wyoming, but when are these occurring, across the country? What are the list of properties going up for auction, whether it's lien or deed? And, oh, by the way, what is all the other information, right? Because usually the lists that are publicized, at least back in the day, were parcel numbers, right? What does that tell you? Nothing, right? So which ones are vacant land, which ones are homes, which ones are commercial, all of that stuff gets sold in these auctions. And so that property data was critical. And so, Taxable Resources, the website or the research platform, today seems very basic, especially when you have things like Zillow out there. Finding out information on properties is fairly easy compared to what it used to be. But the basic problem of just knowing when, where, and what properties are going up for auction is the very first problem that we went about solving. Now, beyond that, right, when we started putting visualization of that data, in a map, and okay, location can come into play. What are the rougher parts of town? Which are the nicer parts of town? Right, really digging in to figure out which ones are worth buying became what is now a fairly easy activity. I mean, we can underwrite and say, hey, in the whole country, give me, all of the bowling alleys going up for sale next week, right? And that's something that you couldn't do, 5 years ago, let alone 10 years ago. So that was definitely problem number one, right? Now, when we were engaged or really asked by a fund to help, develop a software to help manage their portfolio of tax liens, that was really problem number two, because I'm sure as you can imagine, like buying these liens, especially in multiple states that follow slightly different rules, they accrue interest slightly differently, and even within a state, it might be different, county to county. Having 10 of these, okay, you could do that in Excel, right? Having a few hundred of these, you can probably do that in Excel. You start having thousands of these, right, in different states, it starts to become a logistical nightmare, having multiple people. And that's really where the management platform, solution came about, is allowing an investment group, institutional minded, right, wanting to place, $5 to $100 million a year, that they had a platform that multiple people, right, could interact with, have a single source of truth. They could store documents, right? The system would tell them what the redemptive value of their portfolio is. And then also the banks that we were working with, they got excited about it because they had some insight into what was going on in that portfolio, because they could have their own login, right? And so from the tax lien side, it was a game changer. Obviously, I'm biased, but I've been told that by not only our users, but the National Tax Lien Association said we really changed the game when we rolled that out, because it really opened the door to banks, and really, banks came in and were willing to invest in tax liens that hadn't done at that scale. They were there, right, but just wasn't as easy for them to access the market.
Yeah.
So that's the portfolio management. And then the third one, the capital, was really in the mid 2015, 2016 timeframe. We were really trying to dive into the tax deeds. We kind of had tax liens figured out. We had majority of tax liens sold, nationwide. We're by institutional investors that were using our platforms of some nature. We kind of saturated that market, and obviously, as a company, we're trying to continue to grow. And so we saw all of these tax deed auctions. Like, how do we appeal to these? We didn't have a whole lot of users that were tax deed folks. How do we appeal to these guys? And that's really where we learned, okay, the tax deed investors are just different, right? Mindset, they're real estate investors. But the biggest problem they had was just capital, right? Most of them are very, very good at what they do, but even with $400,000 or $500,000 in cash, most of them didn't want to put that much cash out there, all of it out there, and then have to wait, right, while you go through quiet title action to get insurable title, right, so they can go get other bank financing. It was just a very cash intensive process. So we initially didn't look at providing the solution. We actually worked with a bank, trying to get the bank comfortable with it, and assuming that if we had that capital solution, more people would use our platform, right? We'd make our money that way, right, as users of the platform.
Yeah.
And actually, the bank was liked the model. We did a lot of data analysis with them, got them all the way to the point where they said, yeah, we're on board. We just need to get some clarification from the SEC on what to put this investment in, because and I'm not a banker. I don't know all of the details, but my understanding is they had real estate and they had real estate securities, and they couldn't mix between the two, and they just didn't know what to put it in because these tax deeds are kind of in this weird middle ground. Well, the SEC, my understanding is SEC came back and would not tell them where to put it, and the bank basically said, well, we're hands off. That's basically, they took it as, well, we don't care where you put it. We're going to fine you down the road at some point. And the bank said, we're out. So it was kind of a, door closed scenario for us initially, but as with like all things, door closes and 3 windows open up, we kind of said, well, we did all this work. Maybe we could raise some capital and provide this funding, right, and run a fund to provide that solution, as opposed to working with a bank to provide that solution. And that's really how Mountain North Capital came about. And it's that has been another kind of unplanned but great success for us in growing that as a solution for the folks that are looking for capital, to buy these assets that are very, very unique that banks typically don't touch.
Yeah, that's awesome. So you guys are not only helping them find it, you're helping them with the due diligence, and then now even helping them finance these tax deeds, which is sweet. Talk to me about that due diligence piece. Like, if I'm looking into this, it's probably one of the most important things, right? You don't want to just go out and buy any old tax lien out there. You want to buy something that's got some teeth to it. How do you guys help them with that due diligence piece?
Well, it's really the data component, especially on the lien side, right? Is when you're buying liens, and you're, when you look at it from a risk standpoint, you're going to be into properties, 2, 3, 4, maybe 5% of the value of the property. There's a lot more margin for error, right? Of like, hey, if it was worth 50,000 instead of 100,000, and you're only into it for 5, right? You still are okay. And so the level of underwriting that tax lien investors do, isn't as deep as tax deed guys, right? And so they really are underwriting in bulk, looking at large data files, filtering down what they think they're after based on data, right? And they might, in certain areas, go out and take pictures of the property, which is good. But they just need property data. And so that's the main thing they were provided, was just a very standardized data set across, not only all the counties in the state, but across the whole country, so they can take that data file, ingest it, right, and it has all the information they need in order to say, these are the ones I want to buy, and here's what I want to buy them at, right? And everyone's secret sauce is slightly different. I found them to be amazingly similar, right? It's all a flavor of ketchup, but everyone has their slightly different, spices they like to put in that ketchup. Right. But the data input, it was pretty consistent about what they're all looking for, and so that's really what we help the tax lien guys. Now the deed side is different, right? They care about all that stuff, but this is, you're putting out a whole lot more money per asset, and so your underwriting is much more, in depth. And so we added things like the ability to order a title search through the platform. You can actually order an inspection, right? And so if you're not there locally, you can actually have a third party go take pictures tomorrow, and you get pictures back in 2 days, and what that property looks like. That's kind of a common thing that, things, the way Google says it is from 5 years ago is now what that property looks like today. So don't rely on Google Street View. I mean, it's not a bad thing to do initially, but a real look at that property recently before you place, $200,000 on something is highly recommended. And so we offered that, capability. And then, just like I mentioned before, the visualization of that information. Of most people, real estate investors, they're not just looking to place capital. They have very specific parts of town they want to buy it in. And so seeing where these are located, right, and targeting the ones based on location as much as the data, then that became much more critical. And that's really how we enhance the platform for the tax deed guys.
Cool. That's awesome. What do you see as maybe one of the biggest mistakes that investors make when they're looking at tax deeds like this?
Well, I think there's really two, right? The first one is, and it's really a myth, but assuming that there's no bad investment in the tax lien and deed space, right? And I've seen that in advertisements like government guaranteed return, like all these things like that isn't true. I guess maybe legally it might not be fully untrue, right? But I think if you go into it with I can't lose, mindset, just the quickest way is to lose.
Yeah,
I
right.
mean, there's nothing that the counties, and it's not the county's fault, right? They're willing to sell a tax lien on anything. They're just trying to recover the lost revenue. Is the way I look at it. Is like they need money to pay the teachers, pay the police folks, firemen, pave the roads, right? They're looking to recover that lost income. And if somebody's willing to buy a lien on a worthless piece of swampland, they'll gladly sell them a lien, right? But then when the lien holder goes unpaid, or the lien, homeowner goes unpaid for multiple years, lien holder goes to foreclose and realizes, wait a minute, I bought this lien for $5,000 and this is literally worthless property, right? Whose fault is that? That's the investor's fault. That's not the county's fault. And so that's definitely a pitfall or pothole that folks can fall into is assuming that you're going to get a return. And the second one that people really don't think about, and this is definitely a nuance in tax lien investing, is the fact that you don't get insurable title, right? You're getting, it has different names, but it's basically a quitclaim deed from the county, right? It comes with potentially other garbage, right? And you have to go through a separate process in most states to get insurable title, right? Most people don't even know what that means because most people buy, properties, I'll say normally, right? And you go through a title company, you get title insurance, like they've done all of that.
Right.
You got insurable title when you acquire the property, but you don't get that from the county or the state or the city, whoever you bought that tax deed from. And so there's really ends up being two methods of underwriting, right? There's the underwriting of the asset, like most people are familiar with, like, hey, I think the property's worth X dollars. There's a lot of people that teach that out there, but nobody really teaches, hey, you got to underwrite the title as well, right? Hey, yeah, it might be worth $100,000, but if it's got a $20,000 second mortgage on there that wasn't notified correctly, then you are responsible for that. Technically, that doesn't get wiped out like most mortgages do. And so understanding that was really the unique thing that we were, offering the bank, and what we understood is how to underwrite this stuff. And we bring that to the investors as well, is knowing what to say no to as much as, bringing the cash to the table. And those are the two, probably the biggest things that you can get caught, with your, I don't know the right terminology I can use there that is politically correct, but
right.
You can get caught where you thought you made a good purchase and you didn't, right? And you lose a couple of times and obviously get soured on the asset class and move on.
Right. Yeah. Nobody wants that. Talk to me about the financing programs that you guys offer. How are they structured? Like, what's the general structure of a tax lien finance package? Yeah,
it's a unique structure, we call it profit share structure, right? It's not a loan, we're not a lender traditionally. It's not a mortgage that you're taking out on the property. It's really, hey, you as an investor, if you know what you're doing there locally, and you're still simply just cash strapped, right? There's only so much you can put out. Then we can be your capital partner that comes in. We know the asset class. We know how to provide the support in attending the auction, buying the asset, right? Taking that asset through a quiet title if needed, right? Then we can come in, and truly it's a partnership. And so the folks that we work with, they're basically the asset managers, right? The project managers on that. They're identifying the ones that they'd like to purchase, what they'd like to purchase it at. We're verifying all that information. Then we're going to the auction and buying it. And then they get to manage the disposition, right? They get to decide, do I want to remodel this property? Do I just want to clean it out and sell it? Right? It's their asset to manage. Right? We're just the money, writing the checks, behind the scenes. And then at the end of the day, when there's ideally a good profit to be made, then we split that profit. And there's different tiers of what that split looks like, depending on how much they'd like to deposit, as their skin in the game. But that's how the program works at a very high level. It's a profit share partnership that we're working together.
Yeah.
Not a traditional lender, scenario.
Right. That's cool. That's awesome. So walk me through maybe like, a success story, right? There must be one property out there that, when you did it, you were like, man, this is amazing. Or you've got a customer or client that's done one of these deals all the way through and made a bunch. Like, give me a good story. Tell me somebody that's had a great outcome, using the tool.
Yeah. Well, we have obviously a ton of success stories. I mean, we bought with partners, bought and sold several hundred properties last year, roughly $20 to $30 million in total that we worked with partners on. But one of our very first, he's not the first, but one of the first partners we started working with has a really cool story where he started buying really just single family homes. He was looking to build his rental portfolio in a couple markets initially, and eventually kind of focused in this one. I won't give it away because he's been very, very successful, and I want to tell everybody, hey, rush to this market.
Sure.
But he eventually graduated and said, hey, I found this asset I'd like to buy, which was a 7-plex, and so we helped him buy that one. He ended up buying that one as well as another was a 12-plex in the market. And in doing this, right, by then he'd done 3 or 4 houses in this area. The 7-plex, the 12-plex, he started to grow a pretty good relationship with the local, the city and the planning commission and all that. And they came to him with an opportunity, and it was a commercial building in downtown, which was an old newspaper headquarters.
Yeah.
And said, hey, we'd like this. We know this property is coming up for sale. They had a unique. It wasn't a tax sale specifically. It was a receivership scenario. But we're looking for somebody to buy it. But we don't just want to sell it to anybody. We want somebody to actually do something with it. You seem to be someone that actually does something with the properties you buy. Could we work with you? Well, that partner, Brad Norman, he's actually a real person. You can go look him up. But he didn't have the money, capital needed to buy the commercial building. So came to us and we worked with them, and it took us a lot of extra research that we don't normally do, because commercial properties have a lot of other hair that can be on them that single family homes do not. But ended up working with them and buying. It was a 53,000 square foot office building for about $500,000. And then within 18 months, he got it reappraised for about $2.5 million.
Wow.
And there was a little more capital that was put into above and beyond the purchase price, but that was an amazing success story that I like to think everybody has the opportunity, if they get the right market, make the right relationships. Right, we can be the partner that takes them from a single family home flip here and there all the way up through that. And so he's one of my favorite success stories, if you will.
That's cool.
So where he really saw the potential of using the program to continue growing his business.
Yeah, that's fantastic. Man, you can make a lot of money picking the right ones, right? Like finding the right opportunities, and hopefully you guys can help us do that. So tell our audience a little bit about where they can find you guys. What's the best way to connect? What's the best way to get signed up, get educated, and learn more about how to work with you guys?
Well, it's a long website name, but it's pretty straight. It's just taxsaleresources.com. And go there. There's a phone number or contact email on there. There's actually a real person that answers the phone. It's not going to an AI. I assume that's the latest thing is a multi-tiered AI trying to talk to. Is like, no, just pick up the phone, make the phone call, say, hey, I saw Brian on Behind the Doors podcast. I'd like to connect with him in some way, and they'll get you in touch with me. That's probably the easiest way.
Fantastic. That's awesome, man. Well, look, I really appreciate you enlightening our audience with a unique opportunity, right? So this is not something that, is probably more mainstream that people are talking about consistently, but another way to diversify, if you're out there fixing, flipping, and maybe you're buying a couple rental properties, what an interesting opportunity to maybe buy even deeper and find unique opportunities this way through tax deed investing. So Brian, I really appreciate you being on and offering some thoughts for our users. I'm sure we could talk about this stuff all day long, but we want to make sure that we give them enough to just get a taste today. But any last things you want to share with the audience before we let you go?
No, I greatly appreciate having me on, Dan. It was fun. Hopefully, the audience found it somewhat beneficial enough to go and seek more information. I'll mention there's a ton. I interview industry professionals, attorneys. None of it's all free. Just go to taxsaleresources.com. There's a resources chunk in there, and if you want to understand more detail, and you're right, we could spend days, weeks really talking about exactly how each state works. But if you want to check that stuff out, you can go to the website, check that out for free, and learn as much as you'd like.
Sweet. Well, awesome, Brian. Well, I really appreciate you, man. Thanks for being on.
All right. Thanks again, Dan.
Later. Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.